Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. Okay, still a lot going on here. A very large combined key reversal down and bearish engulfing pattern yesterday. The top of the market was again capped by the combination of the lesser Fibonacci lines at 72.93 and 73.10 plus the flatlining long moving average, currently 73.17. And I suppose to a certain extent by the broken lower trend line of the March to June ascending triangle, and that's currently at 73.49. Prices motored down through some interesting supports, notably the 250% Fibonacci lines of the July 2021 to June 2022 move at 7200 and the recent March to June move at 7184, as well as the old neckline currently at 7047 or late December 21 to March 22 head and shoulders top. However, it failed to close below the latter, opting instead to close on the neckline. As I said yesterday, the recent actions open all sorts of possibilities. For example, we have the big ascending triangle for break lower at the start of this week. A primary target X for this pattern will be in the 66.58 area, with a secondary harder to get target X1 in the 63.80 area. There's also a double top formation, even EVE type, formed from March to date. This has a primary target X2 in the 69.18 area and a harder to get secondary target X3 in the 66.35 area. Finally, there's the opportunity to look at the action over the last 2 weeks as a possible bear flag stroke bearish halfway hesitation move. If that is the case, then we have a possible target X4 in the 68.50 area. On top of all this, with just over half of June just gone, we are currently set up to make a possible monthly key reversal down for June. If we close on the 30th of June either above 75.86 or below 75.13, then we'll be on. Right now, we are looking very much at a possible monthly key reversal down, in which case it would also be an immediate countering monthly key reversal down. All this after last week's weekly key reversal down as well. So far today, a lower open below the neckline, but still within yesterday's range, and a resurgence back up over the neckline, and the two lesser Fibonacci levels at 70.75 and 70.90 before a slowdown and halt. Overhead, we now have the 250% Fibonacci lines at 71.84 and 70.90 acting as resistances. German DAX futures. Okay, there's still a lot going on here as well. An immediate countering key reversal down and bearish engulfing pattern yesterday after the previous session's bullish harami. Yet again, the market failed to fill in the gap left over from last weekend up above between 13.658 and 7.38. In part, I suspect that this may be due to the proximity of the overhead congestion band between 14.079 down to 13.804. Within this band, we have the February 2020 high at 13.821 and the 50% Fibonacci of the October 20 to November 2021 move at 13.804. Anyway, the market dropped down through the February 21 low at 13.356 and the whole of 2021 low at 13.300, as well as the lesser Fibonacci lines at 13.216 before catching its breath under the lesser Fibonacci line at 13.115. Not far below, we have the first of the targets on the downside. To explain these, I would like you to consider this. Look at the March to date action as a sideways triangle, with a shallower upper trend line currently at 14.668 compared to the lower trend line currently at 13.806. I know this is skewed rather than a completely sideways triangle, but it does have merit, and so I'll use it. This current pattern has a possible primary target X in the 12.825 area, and a secondary harder to get target X1 in the 11.210 area. The latter is well off the bottom of my daily chart. There's also another possible pattern. It is to regard the last 2 weeks' action, much as we have seen in UK FTSE futures, as a possible bear flag type pattern. If that is in the case, and it's still a big if that is the case, then the downside target X2 would be in the 12.240 area. Finally, on top of all this, with just under half of June to go, we are already set up for a monthly key reversal here. If we close either above 14,378 or below 14,090, then we'll be on. Right now, we are looking very much at a monthly key reversal down. This after last week's weekly key reversal down. So far today, well, a lower open, but still within yesterday's range, and a move back up over the lesser Fibonacci line at 13,115 before getting stuck at trying to push up over the next lesser Fibonacci level at 13,216. E-mini S&P, US E-mini S&P futures. Okay, once more, a lot of things going on here. A big bearish engulfing pattern yesterday with an open on the congestion at 37.93 and a high just under the lesser Fibonacci line at 38.32 before the big move lower. Prices dropped down through the important declining middle time, currently at 37.23, of the January to March bearish Andrews pitchfork, as well as the March 21 low at 37.20 and the February 21 low at 36.56. Eventually they closed just above the February 21 low. Now, I've spoken at length of the danger period during the crossover of 2 times of the previously mentioned January to March Andrews pitchfork, and also the shift pitchfork for the same move. I'd highlighted the previous crossover of tines from these 2 pitchforks, one on Thursday 4 weeks ago and the other one on Tuesday of last week. As periods, these were periods where one could expect one or more of the following: volatility, a change in trend, or a reinforcement of a trend. This important time period I highlighted with red circles on my daily chart. These 2 crossovers have been the cause of the current market gyrations. For information, the next crossover, indeed the last crossover of these 2 patterns, should they not be usurped by some other patterns or action in the meantime, would be on the 12th of August and thereafter. There's one other pattern I'd like to draw your attention to, and that is labeled late March to late April to date, possible bearish halfway hesitation. I've detailed 2 separate patterns as there is an argument as to where the pattern starts from, assuming the pattern works in the first place. Therefore, target X is for the pattern originating in April and is in the 35.55 area. Meanwhile, target X1 is for the pattern originating in March and is in the 34.20 area. Both are currently within the bearish Andrews pitchfork, which seems to be running the show right now. So far today, well, a higher open and a small reactionary move back up, but it has seemingly still been capped by the middle time and March 21 low overhead. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.